Good evening, everyone. Welcome to the BISP solution. BISP is a tech company which provides technical solutions across the world. So our today's session is planning for ease-based properties in PBCS. So today we will understand this topic with the help of Excel. So this is our Oracle interface of PBCS. So we will move to the Excel sheet. Here we will understand the topic. So this beautiful presentation we have designed for your understanding. Firstly, I will see the dimension here. First of all, I will click on the three-line navigator and then we will move to the dimension here. I will refresh. Sometimes there is network issue. Yeah, so now I will click on dimension. Here we can see different dimensions are there, and under that dimension there are many parents and children's like the area. So under it balance sheet and net income. Here once we click on it, so we can see the total assets and total liabilities here. Once we click on it, so here are current assets, fixed assets and other assets also. Here under the liability side we can see the total liability, total owner's equity, net income. Yeah, so when further we open it, then we can see the cash and securities. Once I will drag it here so that we can see the exact name of all the parents and children's. So here the cash and short-term equivalent, account receivable, total assets, inventories. Here the fixed assets and other assets also. So in current assets we can see this. Here in cash we can see the cash and marketable securities also. So in case once we open it, so we can drag it here. Here we can see the cash option. Yesterday's session we have revised some of the things under it, like the name, alias, account type, variance reporting, time balance properties, and now we will revise some other thing also. So first of all I will explain you some of the things which we have learned yesterday, like the account type. Here the account type is expense, revenue, assets, liabilities, equity and saved assumption. So with the help of this Excel based presentation I will show you that account type. So in the Excel you can see the revenue. So here the revenue which account name, we generally use the revenue. The basic meaning of revenue is generally sales, so it's a totally related to sales. Here we can see. So so commonly we use the revenue account for sales and sales type of account, where we have to sell any of the goods or our asset. So that time we use that account. Here the expense is totally related to the to any kind of our expenses, like the administrative expense. Here the administrative expense is a operational nature. Some of the variable expense, where the expense related to the account, it will come under this expense type of account. Here the assets fall under the category which are our assets, like cash in bank, here furniture, and any kind of asset which we know. Basically, any kind of fixed assets, any kind of current assets, or any kind of tangible or intangible assets. So for that we generally use the assets account type. Here the liability is mainly used for our obligation which we have to pay, like our home loan principal. It could be our loan, our payables, account payables. Here our liability could be our bank overdraft also. So we can select the account type here. In the equity section, we can choose the common stock also. The common stock, our capital, equity capital, retained earning. So that type of thing we can see under the equity section. Here the saved assumption is, what could be the saved assumptions? Saved assumption, generally what we assume, like the interest rate percentage. There are some of the driver which we assume for the purpose of calculation. So that kind of driver, when we use it, so it's our saved assumption here. It's our saved assumption here. Here the inventory is opening inventory, closing inventory, head count, cash in bank. So these are all our account types which we have revised. So after the account type, we will move to our variance reporting, which we have discussed yesterday, but now we will revise this thing. So the variance we can see here. Yeah, this is our variance reporting. So we can see here, like the in the variance we can see the expense and non-expense. So what is actually the expense and non-expense? We can differentiate this thing on the basis of, by taking this example. Here the actual and budget equals to variance. So actual, like the thing, like the travel expense, the actual expense which we have incurred on traveling is 1000, but our budget, the budget which we have allocated, like 1200 is our budget. We can incur our expense till 1200 rupees, but we have incurred our expense, travel expense, till 1000 rupees. So the 200 is a variance. 200 is a variance which is from actual minus budget. So for that we can use the expense account here. And if we have chosen the non-expense account here, so it could be our budget minus actual, like the budget for our sales budget. Generally sale type of nature, we choose the non-expense account. And if we have allocated budget already, then in such scenario we use expense account. So in non-expense account we can see like the sales, we can see the 1200. It's our target, it's our budget in non-expense account. We have to sell till 1200 rupees of sale we have to do. It's our budget. But we 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 sold only 1000 rupees of sale. We sold goods of only 1000 rupees. So our actual sale is 1000, but the budgeted sale is 1200. So the variance is of negative. So in such scenario we use non-expense account. So you can betterly understand this thing with the help of this example, like the travel type of expense. For that expense account generally used where the sales, uh, where the sales nature, if account is related to the sales, non-expense account we can use, just because of actual minus budget and budget minus actual, which we have discussed yesterday. So here the third thing is time balance property. You can see here flow first balance average, which we have discussed yesterday. So just revise things here, the time balance properties here. Yeah, so the time balance properties is the flow average balance. So what is flow actually? Yesterday we also discussed what is the flow. Flow is thing, it's just an alternate flow. Flow, what is the thing? So for what purpose we use flow? Flow is generally used for adding up the values. Like here you can see the January month, Feb month and March month of sale. So here you can see the 100 rupees of sale, 120 and 130. So all the things will be calculated, will be added, and it becomes 350. So when we choose the flow type of account in the time balance property, so that time all the value will be aggregated. Here the same thing is happening in expense, like 30, 40 and 60. So you can see the 130 rupees, it's a flow. But in the exchange rate type, um, we generally use the average, like it's a 81.4. Here it's the rate of dollar here, and the Feb month, the rate of dollar of Feb month is 82.8, and in the March month is 82.4. So so the natural meaning of average is a average of all the data. Here we can take the average of all these things. So it's at 82.2 once we took the average of all 3 months of exchange rate. So this is the meaning of it. Here the balance property which we have discussed yesterday. In the balance, the value which come at last, like the January month. In the January month, suppose the assets cash in bank in January month is 100 rupees. In the February month it's a 120, and in the March month it become 150. So in the March month it become 150, and if we we choose the balance property here for the asset, for the cash in bank, then the value will be 150. The total balance which come at last, it's a balance. And we can understand the same thing with the help of, by understanding the natural meaning of it, like the balance. So balance is a, the natural meaning of the balance is the thing which remains last. So 150 it comes and last. So you can see it here. Here the liability, home loan principal. Here in home loan principal you can see uh, 1900 and 800. So once we choose the balance property here, so the 800 will come under this quarter. Here we can discuss, we have discussed the balance property. So now we will understand the first, what is actually the first, like our opening inventory. Our opening inventory is 100 rupees. In the Feb month our inventory is 120, and in the March month it's a 150. And if we have to understand what would be our opening inventory of quarter one, so opening inventory, for which we have to select the first, then we will get the first inventory which we have in the January month. So it will come here in the quarter. Here in the closing inventory we can see the same thing. Closing inventory is the last inventory. So here the 100, 120 and 150. So the closing inventory what would be? So in the quarter one we have to check this thing. So we have to choose the last, or we can say the ending balance property. So we can see the 150 would be our closing inventory here. So with the help of this we have understood the flow, first, balance and average data type. Here the fill weighted average, and here the weighted average is of natural meaning. We have understood, like the average, weighted average is a weight multiplied by the average of the value. So by this we can get the weighted average of the property here. So after that, after the time balance property, we can see the exchange rate type here, which we have discussed yesterday. Like in the exchange rate type, yeah, in the exchange rate type, it's also a average or ending exchange rate. So In the Excel based presentation, you can see the average or ending exchange rate. When we took the average exchange rate and when we use the ending exchange rate, so like revenue or expense, exchange rate is a rate through which the USD converted into INR. Here you can see with the help of this example. Suppose, yeah, like this is me. Okay, so the common stock, i- here I have uh, $1 lakh of common stock here, and in 2010 January month, so I am the 100% on sole owner of it. And that time the USD, the exchange rate is 56 rupees. So the uh, value would be it's around 56 lakh rupees, I think. Yeah. And on 2025 we have sold our total holding. We have sold our total holding. So here the exchange rate is 86 rupees. So the value of our $1 lakh would be 86 lakh rupees here. So what is the value which we would get? Like when we purchased the amount, that time exchange rate was 56 rupees, and now the exchange rate is 86 in 2025. So here the value, the unrealized loss which we would get is 30 rupees. 56 lakh rupees. Here the 86 lakh rupees. Suppose there is a common stock. Yeah. In that common stock, someone has purchased the common stock when the exchange rate was 56 rupees. That time, 1 lakh rupees of common stock, the exchange rate is 56, and when he purchased it, that time the value would be 56 lakh rupees. And he would sold it, then he will get the gain of 30 rupees. It would not be loss, it would be gain. So here I will, yeah, so this is the profit which he would get after selling this stock. Yeah, so you can see the 30 lakh rupees of profit when he sold their common stock in 2025. Yes. So the compensation calculation here, I hope you are getting the things correctly. In the exchange rate, this thing would happen when we convert it into the INR. We have 1 lakh rupees of USD. When we purchase, the value would be 56 for converting USD into INR. So the value would be 56 lakh rupees. And we sold it, the value is 86. So 86 into 1 lakh, it's 86 lakh rupees. So the remaining value would be 30 here. It's an unrealized profit of 30 lakh rupees. The person will get here. So after the time balance property exchange rate type, here is a source cube is a plan one. You I have explained this thing that what is the BSO cube and ASO cube. BSO is a block storage cube which we have discussed yesterday, and ASO is an aggregate storage cube. BSO cube generally used for the purpose of calculation and input, where the ASO cube generally used for the analysis and dashboarding. Here our data storage property, it's store dynamic calc, never share, label only. So data storage property, the use of data storage property is how data is stored or calculated in the member of dimension. In the member of dimension for which we use the data storage property. So we can see the data storage property here. And there are different things we can see. We have discussed the time balance property, variance reporting, and now we will move to our database property. So here you can see the dynamic calc here. So the dynamic calc, our data storage property, our first data storage property is a store. The use of store is when we choose a store. So store generally used for entering the data, for loading the data. The store generally used for it. If we talk about dynamic calc, so dynamic calc is it totally used for the calcul when we choose the dynamic calc, then the calculation would be on the fly. Here if we don't want to share the member, then that time we choose never share. No data would be shared between the member here. Here the label only used as a grouping of label, and dynamic calc and store is a combination of both the things here. So these five things we use for the purpose of calculation. So here we will understand all the topic with the help of example. So here we will understand the topic. I will move to the topic here. Yeah, so dynamic calc. We know the store property. Store is generally used for the purpose of loading data, for the entering data. But the dynamic calc is quite different here, like the total taxes here. So, uh, so the sales tax here, the sales tax, uh, federal tax source from ERP. Dynamic calc is a calculation on the fly. So I will show you the exact example of it. Just wait for a minute. Yeah. Here the dynamic calc. So the dynamic calc, what is the dynamic calc here? You can see the dynamic calc is totally when the calculation is on the fly. That time we use the dynamic calc. Like here is a sales multiplied by the percentage, 5%. Then the expression would be in such manner. Yes. Yeah. So for our dynamic calc property, think we have to make one of the example here for understanding this thing. Yes. Suppose, yeah, suppose the student, there are different students here, and their fees in the base currency is like 26,100, 20,510, 21,470. It's 18,000 and 18,000 here. So all the fees in base currency is here. So when we choose the dynamic calc here, then the value would be on the fly. Then the calculation would be on the fly here once we calculate the things. So here the two pass calculation. We will see the two pass calculation here. Yeah. For the two pass calculation, we can see that example here. Yeah, so here the two pass calculation is here. So like this is the data here. Our gross profit is like of quarter 1 is of that amount. With the help of January month of January month of profit, Feb and March month of profit, we can see our gross profit is of that level, and the total revenue, the revenue amount is 2,55,409. It's a 93,865, and it's a 1,67,480 rupees. So our profit margin, our profit margin would be in the January month is 21.08%. Here the 73.75%. Here in the March month is 20.10%. It is our gross profit margin. We can see. So the electricity expenses, when we use the two pass calculation, that time the value would be on the basis of calculating member twice in a two passes. Sometimes percentage or ratios, like the percentage or the ratios, do not calculate correctly in one pass. So here two pass calculation applies. Like this is sales, and this is percentage. So when we click on percentage and sales, so when we get the things, then we will understood that that for the two pass calculating calculation of member twice in two passes, like the sales multiplied by the gross profit margin. Here the sales here the multiplied by gross profit margin. Yeah. So here sales multiplied by the gross profit margin. Here the actual amount is like 1 lakh rupees. We could see. The gross profit margin. Here is the sales is our 1 lakh rupees. Yeah. And once we will multiply it, then the value would be on the gross profit margin. Like 20%. 20% is our gross profit margin here. Here I have to do the same thing here. Yes. Like this is the sales. So this is sale, and the gross profit margin would be I will shift it here. Yeah, I will delete it here. Yes. So it's multiplied by the percentage gross profit margin. Like the 30% is our gross profit margin, then the value which would be arrive is our on the basis of our 2 pass calculation. So here you can see 1 lakh multiplied by the 30%, then the 30,000 would be the sales here. Not the sales, it would be the gross profit here. When we applies the formula with the help of sales multiplied by the gross profit margin, so it would be the gross profit here. Yeah. So now I will remove it. Here the gross profit for getting the gross profit total revenue multiplied by the gross profit margin. So you can get the gross profit, actual gross profit here. So this is the 2 pass calculation. Here we have understood. Now we will see we know the plan type, like our plan 1 2 3 is a BSO cube and here is a ASO cube. This two are. If we choose addition here, then the value would be added here, like the cash. What would be the nature of cash? Here I have chosen the addition, then it will be added here. And if suppose I choose subtraction here, then it will be subtracted from the value. It will be multiplied. Once we choose multiplication, it would be divided. When we choose a division, percent, ignore and never also here the option. So this thing we can choose here. Here the data type is a currency, non-currency, percentage, smart list, date, text and transient text. So the data type is different, and when we have to choose the particular data type is totally based on the particular data. Like the currency generally used for the sales data, like the sales amount we received on the basis of currency, in form of currency. Like we have sold 50 lakh rupees of goods, so 50 lakh rupees of goods, rupees INR is a currency. So we can choose the currency data here. It's a data type. Here if some data is a non-currency type, like the, employee count is a non-currency form of data. So we can choose non-currency here. Here the percentage, like gross profit margin, we can say. So we can choose the percentage sign here. Smart list, we will learn this thing in our upcoming session. What would be the smart list? So it's not a we will not learn this thing today. A smart list is a one kind of list which are presented in form of data. in form of table for categorizing the data. So we will learn it after some day. It is our upcoming topic. We will not read today this topic. So the date is our another data type. Date, when we have to load any date here, that time we use the data. And text, for any kind of text we can choose the data. So case would be in form of currency, so we have chosen the currency data type here. Here the smart list name we will choose once we will create the smart list. So it's not our topic, we will take it after some day. So enable for dynamic children. Yeah, it's a dynamic children is a is a calculation of data here. Number of possible dynamic children, and access granted to member creator. So what is the dynamic children here? Number of possible dynamic children we can see here. So the children which we created, how much children we can create, or how much children would be dynamic. So this session, the number of dynamic children and number of possible dynamic children, we will we will deeply discuss it tomorrow. We have understood all this topic today here, and we will continue our session tomorrow. We have understood today our account type property like assets, revenue, liability, expense, equity, and saved assumption here, variance reporting, time balance property, exchange rate type, data storage, and two pass calculation also. So our tomorrow session, we will we will revise the two pass calculation and dynamic children's here. And tomorrow we will also discuss the scenario dimension. Now our topic of account dimension we have completed. We have discussed about the dimension member properties. In the account dimension, there are different things we can see, like there are different drivers, parents, children's here. And when we edit the account dimension here, so you can see the account dimension, there are alias table is default. You can see here hierarchy type is dynamic or something, two pass calculation, and apply security. Data storage is never share. You can see never share, label only, dynamic calc, store, and some other. So never share, we use never share property in the account because this is the dimension and we never share the dimension. That's why we choose never share the account property, account dimension. And display option, we choose the member name here. We can choose member alias or member name. It's totally depend on our choice. We can take any of this. So in the account we generally choose never share because the dimension generally never be shared. That's why we choose that account here. So today we have completed our session of dimension. In the dimension, in account dimension, we have understood different things like the two pass calculation, time balance property, data storage property here. And yesterday we also discussed about the alias, variance and data type also. So today we now I will stop the session. If you have any query, then you can feel free to ask me. That's it for today. We will meet tomorrow with the new topic. Thank you for your participation. So now I will stop the session here. Thank you for your participation.